Hello and welcome to another Smaulgld live stream. Today is the 27th of September 2019. Today is the second live stream of the day. We did one earlier covering Ron Paul's agreeing to give the keynote speech at the Litecoin Summit later this fall in Las Vegas. And in that, I'm not going to relitigate it right now, but in that YouTube or BitChute or podcast, whatever you want to call it, I discussed the differences between a gold standard and this supposed Bitcoin standard and discussed competing currencies. So please check that out. Some thought-provoking things in there. And tonight we're going to talk about the concept of the world dumping treasuries. Now, we have heard for the longest time from the gold pumpers, the silver pumpers. It's funny now, a lot of the former gold and silver pumpers are now acting like they are very sane and rational, and they're now starting to point out issues with China and issues with silver pumping and gold pumping. It's quite amusing, but at least they're catching on. But I want to talk tonight about the concept of dumping treasuries, because it's been false. There's never been any data to show that this dumping treasuries was going on. But first, let's take a look at what's happened in the markets today. And today, again, was a very odd day. Let me move chairs. This one squeaks. You don't want to hear squeaks the whole time. I get comments saying, oil your chair. Okay, well, now we're back and we're in a chair that doesn't creak. Any creaking you hear are bones. Okay, so let's take a look at what happened in the markets today. It was not a good day in the markets all around, other than the cryptos rebounded, but they got hammered the last couple of days, down 20 some odd percent. That's just the chair moving. But let's take a look at gold and silver. And what's happening in gold and silver, I wouldn't say is predictable, but the reaction between the prices of gold and silver and the gold-silver ratio are, if you've been following this channel, almost exactly as we might predict. So let's take a look at the gold price today. And the gold price today was down a little bit. It was down $7.76, down 0.5%. Not a big drop, but it's below 1,500, and that's the Maginot line that I have never called it that, but I've said that if gold got over 1375, continued into a bull market, got to 1,500, built a base there, then you would start to see silver rise and the gold-silver ratio come down. Otherwise, silver didn't really have a prayer of rising, but I did predict at the beginning of the year that silver was, quote, set to skyrocket on that thesis, and it was about $14.90, $15 an ounce at the time when I made the prediction saying it would go to $22 an ounce. It got as high as $19.50 so far this year. Ain't over yet. Okay, so gold went down a little bit. Silver, when gold goes down, generally goes down more, and that's exactly what happened today. Silver was down 3 times as much. Instead of being down 0.5%, it was down 1.67%, down 30 cents. It's down under 18 now, down under 19. It's now at 17.50, so it's really not held up very well. Gold is held near that $1,500 mark. We saw the same thing when gold was at $1,400. Silver was having trouble holding on to 16. It finally got to 19.50, had trouble holding on to 19, has now had trouble holding on to 18, is now in the 17s, and at one point during the day was down to 17.30. So what has that done for the unsustainable gold-silver ratio, which of course I've always said and have said for 5 years, and basically what we're going to talk about later today is about what I've been saying over the last 5 years about the dollar and dumping treasuries and all this de-dollarization, China to crush the dollar, petro-yuan stuff, is really coming very clearly to be incorrect, that somehow China is crushing the dollar, and now we get people jumping on the bandwagon, pointing out all the issues that China's had as if they knew it all along. It's the same with the gold-silver ratio. The gold-silver ratio has been touted for at least the last 10 years as being unsustainable. Silver is rarer than gold and so on. And silver is so useful in our lives, and if only the world knew what they knew, then the gold-silver ratio would be lower. We've explained ad nauseum that silver is a commodity. It's an industrial metal with a small, dormant monetary component. It's not money. as you might say it is today. Some people say it's money. It's not. People don't spend it. It's not used. It's not accepted anywhere. It's been superseded by other currencies. Doesn't mean it's not valuable. It's just that it is not hoarded in the same percentages of its demand component that gold is. And that's why gold has maintained a higher price, because it is being priced as a precious metal, something to be hoarded rather than something to be used up and spent. So when you hear the silver pumper say, and then it gets spent, and then it goes away and is never used again, that's a sign that it's not worth much. Because if it was worth a lot, they would hoard it. They wouldn't throw it away. They throw it away because it's relatively plentiful. Now, obviously, you say, well, that can't go on forever. It's on, at some point. That's one of the pumper arguments with everything. At some point this, at some point that, unsustainable this, unsustainable that. Yeah, at some point, the world's going to run out of all elements, all metals, and probably at some point they won't be necessary in the same amounts that they're necessary today, or at some point there won't be people. But anyway, so the gold-silver ratio right now, 85.48. It had gone as high as 89, 90, a little over 90, and it's creeping up again. But I do expect that if gold were to reassert itself, what I think is still a bull market, you get these pullbacks. There's really nothing that has changed. We're going to go through on Saturday and Sunday night. Sunday night, I want to go through some gold charts showing gold versus the debt, gold versus the money supply, gold versus the Fed funds rates. And you'll see gold has some catching up to do if you still believe there should be some correlation between the price of gold and all the monetary madness that's gone on the last 10, 15 years. So we'll take a look at that on Sunday. But back to tonight, the gold-silver ratio is at 85.5. Now, in the crypto markets today, well, let's do gold. We're not done with gold, because the other point we like to make about gold physical demand is that India is one of the big drivers of gold physical demand, as is China. And India, we've mentioned, is very price sensitive in the last 2 months because the price of gold in July and August pretty much went up over a couple $100, about $1,350 to over $1,500. The Indians slammed on the brakes. Well, this recent price drop, that's changed. Gold price dip prompts Indian jewelers to stock up for festivals. So we talked about this the other night about how Indians will not buy gold when the price rises, and of course, if they see a pullback, they're going to be all over it. This coming from Reuters, saying the phone was ringing continuously. Today, jewelers were placing orders from across the country, said one Mumbai-based dealer at a bullion importing private bank. From next week, retail demand will start improving. We're entering peak festival season. So gold demand generally strengthens this time of year. You got Diwali, you've got this other festival, Dussehra. There's a lot of things going on at the end of the year that push for gold, physical gold purchases. In India, you have the reaping of the crops. If there's been a good season, the farmers are going to have more cash. They're going to buy more gold if the price is lower. So it looks like one thing about higher prices, they're fixed by lower prices, and the demand all somehow starts to even out. Because if gold gets too expensive, you see what happens. The jewelry demand, as evidenced by Indian imports, it slows down. You don't have to have jewelry. Now, monetary gold demand, you don't necessarily have to have your gold, but it is deemed more of either a necessity because you're worried about a financial crisis, so you don't have to have insurance, but there's a demand for insurance if you're worried about a catastrophe, whereas there's not the same urgency to go out and get yourself a gold ring, gold necklace. And also, if the gold price is rising, you also have the concept of FOMO, fear of missing out, and that'll drive gold demand. But any rise in gold demand for FOMO or rise in gold demand for insurance purposes, it pushes the price higher and it drives down the jewelry demand. Now, in silver, that's the reason silver can rise a lot more than gold is the commodity demand isn't really going to change no matter what happens to the price. Because the small amounts of silver, the cheap price of silver per unit, it's not really going to make a stitch of difference. So they continue to buy the silver in the amounts, so that demand stays the same. But what you get is you get this big increase in FOMO silver, fear of missing out on the price, and also you get the overflow from the gold crowd. A lot of gold buyers who are buying for insurance may say, yeah, I'm going to throw a little at the silver stack as well because, hey, it also performs well in a financial crisis, inflationary times. So silver gets that additional demand while it doesn't have the corresponding drop in its commodity demand, unless there's an economic collapse, in which case silver isn't going to do as well as gold. But if it's just inflation and you don't have a real decrease, I mean a massive decrease in economic activity, and if it, quote, just inflation, or if there's a currency crash, whatever those types of things are, silver's going to do well because silver's not used to having that big influx of money coming in, because normally the demand profile is pretty constant and there's just a certain amount of silver that flows towards industry, and if all of a sudden some of that's got to be diverted into minting coins, rounds, and bars, or into big bullion bars for the COMEX or for ETFs, then the silver price can rise. All right, let's move on now to the cryptocurrencies very quickly. They got bashed the last couple of days. Today looks like they're rebounding. It's hard to tell. I mean, you enter a bear market in 2 days in cryptocurrencies. They drop 15, 20, 25%, and then boom, you have what you call chart damage, and it's all over. And the only thing is, with cryptocurrencies, it can all change in the bat of an eye as well. Like I'm looking at it right now, today, let's see, you're looking at a chart, went up to 82.60, was down as low as 79.40 just a few hours ago. You know, so it's not uncommon for their Bitcoin to rise $300, $400, $500, sometimes $1,000 in a day, or lose $1,000. Right now, it's pretty much unchanged, up 1%, but the swing is about 3 or 4%. Same with Litecoin, it's up about 1%. Litecoin is at about $56, I believe. I don't know what the chart says when I took the snapshot a few minutes ago, but I think it's gone down since I took the chart. Yeah, it was 56.45. And right now it's 55.94, but it had been, you know, as low as 53.95. So nearly a $2.50, more than a $2.50 swing on the day, which is fairly significant for a $55 price. And Ethereum also had a pretty big rebound today, still under $200. It's at 173 at the moment, but it had been down to around $164. So it's up $10, but it had been well over 200 just a few days ago at the beginning of the week. Same with Bitcoin, was over $10,000 at the beginning of the week, and now it's at 8,200. Litecoin was closer to 75, 77. It's down to 56, so it's lost $20. And then a couple of weeks earlier it was at 90, and back in June it was at 145, and back in December it was at 22. So big moves in the cryptocurrencies, not for the faint of heart. All right, let's get into this whole China to crush the dollar. Countries are dumping treasuries. The BRICS have had it. Dollars days are numbers. De-dollarization. Gold back yuan. Game changer. Petro yuan. SDRs. Multipolar world. Dollar collapse. Dumping treasury, Sun Tzu, Belt and Road, dollar is toilet paper, global reset, when the dollar dies, end of dollar hegemony, game over, game changer. I mean, these are the standard stock phrases that you've probably heard for the last 6 to 10 years. Every gold pumper has repeated them, although some have stopped repeating them and have started to see the reality, even though this reality never, this concept that the dollar was being crushed and that there was going to be a gold back yuan and a petro yuan and the debt was going to crush the United States and countries were dumping treasuries and other countries were buying gold hand over fist and they were preparing for the gold back yuan, the gold back whatever, ruble, and it was going to crush the dollar and they're de-dollarizing. It sounds like a drone because it is. The BRICS have had it. Well, just the other day, this is Zero Hedge, and Zero Hedge plays this up a lot. They keep talking about everything comes to an end. The pound ended. The dollar's days of hegemonic whatever are over. Yeah, everything comes to an end. But this idea that this is all imminent. Right now, it's not even close to imminent. The idea of the yuan being anywhere near the value of the dollar in international trade. It's a joke. It's not even close. They've got capital controls. They've got devaluation issues. They owe trillions in dollars. They owe dollars themselves. It's not a widely respected reserve currency. Now, the gold pumpers try to make it sound like everybody wants the yuan and they're going to force this country or that country to use it, and they're working and it's all happening and the dollar days are numbered and they're working out alternative arrangements to crush the dollar. It's nonsense. This whole repo thing and everything that's going on indicates there is a dollar shortage. You're shilling for the dollar. This is nothing. I didn't create the situation where there's a worldwide demand for dollars. I'm just reporting on it. It's a fact. It's always been a fact. When I say always, it's been a fact the last 5 to 10 years. Just because countries don't like the United States, there's a difference between not liking the United States and having the ability to change something. When I hear the BRICS have had South Africa and Iran, they're going to, and Russia, they're going to get together and crush the dollar with Venezuela. Of course they are. I mean, it's only believable if you want to cheerlead and believe in a cause and you think that's right, crush the dollar. And there were a lot of gold pumpers that were pushing this China narrative. China produces, I'm not going to mention names, and we just borrow money. I mean, totally ignoring that China borrows more money than the United States creates. Oh, but they owe it to themselves, so that makes it okay. There's been a lot of intellectualizing around theories on how China could crush the dollar, but that's not reality. I mean, they're ignoring cold, hard data on the demand for the dollar. You could say whatever you want and whatever criticism you have about the United States fiscal and monetary policy. You can only then quickly throw up Mario Draghi's fiscal policy and the monetary policy, that the fiscal policy is the one that does the helicopter. We can't do that. But what we can do at the monetary policy level is print the money. And we are going to print the money. I mean, they're printing more money and have printed more money than the United States QE. The ECB has done over $5.5 trillion in QE. The Fed's only did like $4 trillion. And they've stopped doing it. They've raised rates. And meanwhile, while Mario is printing the money, he's also lowering the interest rate. So the interest rate is now close to 1% negative. But we still can't put the money in the people's bank accounts because we don't have this power. It's a fiscal policy. So that's what you got going on in the ECB. China has doubled the amount of debt that the rest of the world has issued. So for people who are talking about China like they're going to crush the dollar and somehow that's going to send gold skyrocketing because China buys gold and it's some type of Sun Tzu deception, nonsense. Now let's take a look at, I mean, these numbers haven't really changed, but I'm going to show you. And I used to put these numbers up all the time. People used to say, it's not true, that you can't, the other one is, I love this one, you can't believe the official numbers. Oh, so we're supposed to believe some BS numbers you make up? I would say that the numbers of the amount of gold or silver flowing into India this month declined. Nonsense! They're always, in their minds, the gold and silver pumpers, there is no such thing as a decline in gold or silver demand. If you see a number where there's a decline in silver demand or gold demand or imports going into India or China, they're lying. It's a Sun Tzu deception, or you don't believe the official numbers because everybody knows that Chinese and India are buying gold hand over fist. Saw the same thing when the U.S. Mint numbers went down. They're lying. The U.S. Mint wants you to think that there's no. I'm not saying that you people, they don't make up numbers. Companies and countries don't make up numbers. But once you start believing that you, by definition, aren't going to believe anything other than numbers that show China crushing the dollar and gold demand skyrocketing. And I mean, if you listen to some of these channels, you think that the world wakes up, other than Americans who are by nature not smart because they don't buy gold or silver, that the rest of the world is out there just on the hunt for the next gold bar, the next silver coin. It's not the case. Okay, but let's say what we're looking at here is something I've been tracking for years, which is the TIC report from the U.S. Treasury. And I mean, Japan, 1.13 trillion as of July 2019, and they had 1.035 trillion in U.S. Treasuries a year ago. in July. So they went up. Yes, but you don't know what August and September numbers are. They always used to tell me that one because there's a 2-month lag on the chart. That's when they really dumped them. And then, I've been following this for years, and that's not what happens. Same with China. Now, China has had issues. They are selling off assets. I mean, they needed the money. But still, they have 1.18 trillion in U.S. Treasury securities. And a year ago, they had 1.171. So you're talking about $53 billion lower. I mean, that's really not a lot. Brazil has 309 billion in treasuries as of July. Last July, they had under 300. India, the BRICS have had it, dumping treasuries. They got 160 billion in treasuries. A year ago, they had 142. This is just foreigners, and the outstanding foreign debt is 6.6 trillion, and a year ago it was 6.25 trillion. So there is no dumping of treasury. In fact, there's an increase of treasuries. Saudi Arabia, 190 in U.S. treasuries. A year ago, 166. But they're gonna accept the yuan, and there's gonna be a petro yuan, and then they're gonna bring it over to the Shanghai Gold Exchange and exchange it for gold. Game changer. No, none of that ever happened. Ever was gonna happen. So this is the lay of the land, and you can say you'll see. It's heading in the other direction, and it has been heading away from the whole dollar collapse scenario. And yet, once the gold pumpers latched onto this concept, they haven't let it go. They keep insisting China to crush the dollar. It's only a matter of time. Dollars' days are numbered. Game over. Game changer. Petro yuan. I mean, it doesn't stop. Now, as I mentioned, there are some of the channels that have finally wisened up and no longer promote that narrative and, talk about the amount of debt China has. The real issue is not United States, it's not China, it's not ECB, it's not Japan, it's globally. But the point is, if everyone's doing something, the people that are going to get hurt are not the ringleader. The ringleader is the United States. The ringleader tells the other countries what to do. So, for example, and I've mentioned this many times, that United States told, basically, Mario Draghi, ECB, you have to do QE. Japan launched their stimulus and QE program the day after the Fed stopped theirs. The Fed tells the other countries what to do. The Fed can print the money and bail them out. The Fed's in charge of this game. So when the Fed does this repo stuff, that's not a sign of weakness. That's a sign of strength that they can say, yeah, you know what? We're going to put up a repo facility. Bring us your stuff and we'll lend you money overnight, much as you want. And it's a permanent feature. And you have all these channels saying, oh, it's unbelievable. It's madness. They've lost control. No, they haven't lost control. That's another one. Fed is losing control. Elite are losing control. When you have the printing press and you have the military, you don't lose control. In fact, all these companies are it's almost like a loan shark. They're all up to their eyeballs in U.S. dollar denominated debt. And the Fed can print up the money. The Fed, and the thing is, I'm not advocating for this. I'm not endorsing this. I'm explaining this is the way things are. And when people get all excited and they try to make it sound like the Fed is losing control, it's unsustainable, it can't go on. Well, the place that's going to crack first is in the non-U.S. currencies. It's not going to be the dollar. Because, first of all, no country, even those that are trying to get out of dollar hegemony, they don't want the dollar to collapse. And they have no way of making it collapse. But if it collapses on them. So I'm not sure where all this concept comes from. Well, it's the same idea. Some people who have precious metals think if the world ends, they're going to win. I don't get how that happens. If the world ends, there's nothing to buy. So your precious metals aren't really worth much because what are you going to do with them? Oh, you're saying you can't eat gold now? Well, pretty much. I mean, the gold and silver, no matter what they are valuable because other people find them valuable and there's value to exchange for them. And look at Venezuela. I mean, if there are no eggs and there is no milk, Doesn't matter if you have gold or silver. You can get out of Venezuela, but you're not going to be rich in Venezuela because there's no wealth to be had. All right. Well, there you are. You could see, and I have the charts going back at least 6 or 7 years on this. The increase in the amount of foreigners owning U.S. Treasuries has increased. Now, the flip side to that is the U.S. has to pay all this back. But the other flip side to that is if the United States really didn't want to pay it, what are they going to do about it? What are they going to do? I mean, you know, mafia puts out money on the street. You owe the money and you don't want to pay it. All right. Tell your loan shark you're not going to pay it. See what happens. Anyway, enough of the mafia analogies. Let's go back and see who we have in the comments. We got anybody in the comments? Remember, I did a YouTube live stream earlier today. It's up on BitChute. It's on Smaulgld.com. The patrons have it. The lovely patrons and the lovely subscribe star mug stackers, they now have access to that. So consider becoming a Smaulgld patron or a Smaulgld subscribe star mug stacker. I hear Small Dog in the background. Someone, I think it was Phil called it our dog Small Dog. And someone also very cleverly said it's Small Doge. So if I had a crypto dog, it would be Small Doge. All right, let's see the comments tonight. Looks like we might have a quick night here tonight. We got Phil McCain and Ann Holloman and Mint Marcus. Off topic, Asian stocks dropped today on news that the U.S. may limit. Oh, yeah, I'm sorry. I'm glad you reminded me. I do have that story in my show notes, and I just blazed over them. Let me pull that story up here. That means a very important point when I was talking about China. I should have mentioned it. I'm going to go back to today's folder. What he's talking about is there was talk today. Here it is. Yep, China. Okay. I pulled this one out. Stocks turn lower on report that White House considering limiting investment in China. Now, what he's talking about here is creating the inability or shutting you off from buying Chinese stocks, allowing Chinese companies to access the U.S. public markets through IPOs, reverse IPOs, whatever, however they get into the market, and preventing Americans from holding those shares. That's a pretty big deal. That's shutting China out of the capital market. Remember one of the things I mentioned about Saudi Arabia? The reason Saudi Arabia is important today is not so much because they underpin the petrodollar and they only price their oil in dollars and only accept dollars, and it keeps China from using the yuan. That's not the real reason Saudi Arabia is important today, because the United States is a bigger oil producer and exporter than Saudi Arabia, and we don't rely on Saudi Arabia as much as we used to for imports. One of the main strategic important reasons for Saudi Arabia is they do have a lot of military hardware. They buy a lot of military hardware. They were against Iran, so they're part of the Israeli, Saudi, U.S. uneasy alliance against that part of the world. But also Saudi Arabia takes its oil money that it gets not just from the United States but from other countries, and it buys and invests in Silicon Valley stocks. Well, I guess the Chinese do the same, but they may want to shut them down there. So what Midmark is saying is the U.S. may limit what people in the U.S. can invest in China. To me, this isn't a good idea at all. What do you think? Well, it's never a good idea from a conceptual free market perspective, from the perspective of individual freedom. Of course not. But if you're dealing with national goals, put it this way, if you're a soldier, it's not a good idea for you personally as a matter of your personal safety to go into battle. But from the country's perspective, that's a good thing, because the more people they can put into battle, the more likely the country can win. So depends on which way you're looking at it. If you're looking at it from a national perspective, it could be a good thing. If you're looking at it from a personal freedom, free market perspective, no, it's not a good thing. And again, this is talk, so I'm not sure where this is going. We'll keep track on it. CoinsAZ is here. Fiona is here. Okay, Anton S. He seems new, unless his picture is new. I haven't seen him before. Andrew is here. Times like these, says Ann, when all is tank, I read my horoscope and entertain myself. Well, it's better than listening to the pumper channels, because that'll make you poor. All right. My Chinese horoscope, I am mental. Good for me. I am metal. I am mental. Good for me in owning metals. Maybe my metals will do better than cryptos in the short term. Oh, okay. Well, we don't know. Wow, she really is reading a horoscope. I'm not going to read the horoscope, but you guys are welcome to read the comments. Anne is giving her Chinese and Western horoscope. All right, well, if I don't have any other comments or questions tonight, I will leave you with Bernie. Bernie will do the countdown. And I do have, I'm not going to do them tonight, but I have some real doozies from Bernie and Dizzy Miss Lizzie, some really good ones. Got them in a folder. I'll read them to you at some point with full. So Bernie, you ready? That's right. So I'm ready now because you have not been giving me the amount of time that I need to get my message across on your channel. And the 1% and the billionaires, what about the millionaires, Bernie? Well, the millionaires, they're not as bad as they used to be because you have a couple of $1 million. Well, no, that's not the reason, because $1 million isn't what it used to be. So if you're a billionaire, we want to make... Bernie, can you do the countdown, please? Oh, okay, so you got to have me back on so I can talk about Ben Franklin and the money and the 1%. Well, we'll see if we'll do that. Can you give us the countdown, please? All right, so I'm going to give you 10, and if there's no more comments, then what we're going to do is we're going to say goodnight. So 10, 9, 8, 7, Trump's got to go, 8, 7, Bernie. Start again. I don't want the politics interfering with your countdown. What did I say? You said Trump's got to go. No, I didn't. You did. Start again. Okay. So 10, 9, 8, 7, 6, 5, 4, 3, 2, 1%, 0. Okay, thank you, Bernie. Someone says they want Seamus to count. What? You know, we haven't had Seamus on for a while now. So I'll give you 10. So it starts with 10 and we'll go to 9 and then 8 and 7 and 6 and 5 and 4 and 3 and 2 and 1. How's that? Have a good night, everyone.